Welcome back to your weekly Bitcoin and crypto roundup. I'm Corbin Fraser, and this week, some crypto markets, a little turmoil. Behind the chaos, big moves are happening. Congress just crushed the IRS's anti-crypto rules. Lawmakers are pushing stablecoins to protect the US dollar hegemony. Michael Saylor is pitching a Bitcoin reserve that could generate, hold on to your hats, $81 trillion for the US by 2045. Meanwhile, you've got Arthur Hayes, the GOAT himself. He's seeing Bitcoin bottoming at around 70K. Cathie Wood predicts a deflationary boom. And of course, the Bybit hackers, the guys that got away with all that money from Bybit, they've so far laundered $300 million. So let's jump in. But first, got some privacy updates. So every digital transaction leaves a trace. And in the Bitcoin and crypto world, which was once thought of as more private than traditional finance, it's now completely trivial for anyone to track the entire history of your transactions, including how much is in your wallet. And that includes things like how much you've been spending, what kind of silly meme coins you've been buying or losing money on. This is especially true here with Ethereum and EVM chains. So it's a dangerous situation. And as we've seen with the alarming rise in these like so-called $5 wrench attacks, which are basically physical assaults on people who, due to Bitcoin and crypto's lack of privacy, are known to have some large holdings. Imagine buying something in the real world, like you go buy a coffee and the seller instantly knows how much is in your wallet. You know, the guy with the gauged earrings and the tattoos on his neck. If that amount is large, it could make you a target, which is exactly what has happened to hundreds of people around the world already. Now, with the threat of physical violence, these people are forced to transfer crypto to the attackers. But the dangers of lack of financial privacy aren't just physical in nature. Without financial privacy, you're also exposed to censorship and exploitation. So imagine being put on a blacklist for contributing to a political party, or perhaps donating to some Canadian truckers, or blackmailed because you bought something considered unwholesome. Beyond that, financial privacy is, of course, necessary for normal business relations. Like, businesses can't function if the competitors know exactly what they've been buying and selling and for how much. But the good news is it's all easily fixed now thanks to Xano. We have the technology in the crypto world and the blockchain space to make digital financial transactions completely private. Xano brings untraceable, confidential transactions right into the world's most popular self-custody wallets. That includes the Bitcoin.com wallet app. So getting started is easy. Just add the Xano wallet inside your Bitcoin.com wallet. Just go add new wallet, tap Xano, ready to go. You can start buying and swapping into Xano seamlessly, and then send and receive Xano privately. So financial transactions are deeply personal. Privacy should not be optional. It should be standard. So with Xano, your financial activity stays private, just as it should be. So go get the Bitcoin.com wallet app, experience Xano, take it for a spin, get back control of your financial privacy. Okay, back to the news. A sentiment shock, not just tariffs, has triggered a historic $5.5 trillion market crash since February. And according to the Kobesi letter, a widely read weekly newsletter offering in-depth commentary on global capital markets, the S&P 500 lost $4.5 trillion while crypto shed $1 trillion as extreme greed flipped to fear in just days. So despite bullish crypto policies, markets tanked, the Ethereum short positions hitting record highs, and the US Bitcoin reserve becoming kind of a weird sell the news event. Hedge funds slashed tech stock exposure, and crypto funds saw $2.6 billion in outflows in just like a week. With volatility up 70%, the Kobesi warns of 1,000-point Dow swings ahead, calling sentiment shifts the most profitable trading strategy of the year 2025. Now, risk assets suffered their worst day since 2020, with the Magnificent Seven tech giants, that's like Apple, Microsoft, Amazon, Alphabet, Meta, Nvidia, Tesla, shedding $830 billion in a single session. Bitcoin wasn't spared, dipping below $80,000 as investors scrambled for protection. But here's the twist. Singapore-based digital asset trading firm QCP Capital spotted a surge in long-term call option demand, hinting at a BTC rebound. Plus, falling treasury yields and a weakening US dollar could turn into a tailwind for crypto. So while Trump's tax cuts and fiscal plans add uncertainty, the market may not be down for long. Former BitMEX CEO Arthur Hayes is calling for Bitcoin to bottom at $70,000 before its next major surge. He sees short-term volatility ahead, but insists that bull market momentum remains strong. So his whole strategy is just patience. Hayes warns that central banks will need to step on the monetary easing. That means print or go on before Bitcoin's big next leg up. So for risk-averse investors, he suggests waiting for clear signals from the Fed and other central banks before going all in. Despite short turbulence, Hayes remains ultra bullish, maintaining his $1 million Bitcoin predictions especially as Trump's policies drive inflation and demand for hard assets like Bitcoin. ARK Invest's Cathie Wood predicts a deflationary boom ahead. Despite a 3% GDP decline in Q1 2025, she sees AI, automation, and tax cuts fueling productivity-driven growth, echoing the 1990s Clinton-Gingrich era when fiscal discipline led to surpluses. Wood calls Bitcoin a rules-based monetary system, likening it to Bretton Woods, and credits Trump's deregulation for reversing the SEC's anti-crypto stance. She notes crypto talent is returning to the U.S., policymakers are now fostering digital asset innovation instead of driving it offshore. With inflation projected to fall below 2%, AI advancing rapidly, and crypto thriving under new policies, Wood envisions a 7.3% GDP surge, signaling a potential economic and financial system shakeup. Strategy's Michael Saylor is making a bold pitch to the White House: turn Bitcoin into a national asset and generate up to $81 trillion for the U.S. Treasury by 2045. So his strategic Bitcoin reserve, they've been calling it the SBR in some places, but this plan calls for government to acquire 5 to 25% of the Bitcoin network through daily purchases until 2035, securing long-term financial dominance. So he argues that with $10 trillion in annual revenue by 2045, this could offset national debt and solidify the U.S. as the leader in digital finance. His message to policymakers: the time to act is now, and definitely before another country gets in. David Bailey, CEO of Bitcoin Inc., BTC Inc., and Trump's Crypto Summit attendee, he's got a bold idea: let wealthy individuals buy the proposed U.S. Gold Card residency program with Bitcoin. So Trump's Gold Card plan would let high net worth individuals secure U.S. residency for $5 million. Now, Bailey argues Bitcoin payments would help wealthy applicants circumvent restrictive banking policies while boosting America's Bitcoin stash. It's very difficult to send high net worth bags across borders, but Bitcoin, that makes it pretty easy. In a huge win for digital assets, the U.S. Congress has torched the Internal Revenue Service's controversial broker rule, which critics say stifled crypto innovation and pushed development overseas. So the House and Senate voted to repeal the rule, arguing that it imposed unnecessary compliance costs on DeFi and crypto brokers. Now, lawmakers praised the decision as a move to keep digital asset innovation in the United States, with House Financial Services Chair French Hill calling it a victory against government overreach. Now, all eyes are on President Trump, who's expected to sign the resolution into law, solidifying his administration's pro-crypto stance. So also, you've got the same guy, Congressman French Hill, made it very clear stablecoins could be the key to protecting the U.S. dollar's dominance. He spoke at March 11th hearing. Hill emphasized that properly regulated stablecoin markets can modernize payments, improve financial access, and strengthen the U.S. dollar's global influence, all without government overreach. So the hearing focused on the Stable Act, which aims to create clear regulatory standards for stablecoin issuers, things like Tether. Hill argued that stablecoins are already boosting the dollar, processing billions in daily transactions, streamlining cross-border payments, and expanding financial access. So Hill also pushed back against a government-controlled central bank digital currency, or CBDC, warning that it could undermine the dollar, centralize power, and suppress competition. Instead, he supports private sector stablecoin growth under a clear pro-innovation framework, keeping the U.S. at the forefront of global finance. Over to Europe, and the European Central Bank is pushing to finalize preparations for a digital euro by October 2025. But ECB President Christine Lagarde says that its launch depends on legislative approval. So the digital euro project launched in November 2023. It's currently in its design phase, focusing on its technical and legal and stakeholder feedback. But after this phase, the ECB's governing council will decide whether to move forward. But analysts predict that a full launch won't happen before 2028. So the plan includes both a retail digital euro, offering free transactions, privacy protections, and a wholesale version for faster interbank settlements. However, concerns persist about privacy risks, bank destabilization, and competition from China's digital yuan, and of course, United States stablecoins. So, with the clock ticking toward October 2025, Lagarde says that the ECB is ready, but the final call is in the lawmakers' hands. Switching gears and over to some blockchain infrastructure news. With Ethereum's price tumbling 50% since December, the community has launched Ether Guild, which is this new nonprofit aimed at revitalizing ETH's market position and trying to save Ethereum. So the initiative follows internal conflicts within the Ethereum Foundation, which including Aya Miyaguchi's removal and the formation of this Etherealize, which was an entity focused on institutional adoption. Ether Guild's mission: make ETH's money as central to Ethereum's identity as Ethereum is the world computer. So the group argues that Ethereum's success depends on ETH's value and vice versa. So the community's betting big on grassroots action to restore confidence in the second largest cryptocurrency by market cap. Hackers behind the Bybit breach have successfully laundered $300 million of the $1.4 billion that were recently stolen, despite global industry efforts to block them. So according to Elliptic's Tom Robinson, at least 20% of the stolen funds have gone dark, with attackers working around the clock to obscure their tracks. The Lazarus Group, suspected of orchestrating the entire heist, has already converted 6,000 Bitcoin, making fund recovery nearly impossible. While industry-wide transparency and cooperation have helped trace $40 million, security experts warn that North Korea's laundering tactics make it further recovery extremely unlikely. So in the wake of the attack, discussions around Web3 security have intensified, with some pointing to zero-knowledge proofs as a potential fix. Holonym co-founder Nanak Nihal Khalsa argues that blind signing vulnerabilities, especially on ledger hardware wallets, played a key role in the Bybit exploit. Khalsa suggests that ZKP-based wallets could prevent blind signing by displaying these human-readable transaction details, ensuring that users don't unknowingly approve malicious transfers. With hackers increasingly exploiting Web3 security gaps, ZKPs could become a crucial tool in protecting digital assets. And for our final story of the week, we have an exciting announcement from CowDAO. CowDAO just hit a major milestone, processing over $1 billion in time-weighted average price orders. The decentralized exchange aggregator is gaining traction by offering gasless trading, MEV protection, and batch auctions to cut costs and reduce front-running risks. So time-weighted average price, or TWAP, orders split big trades into these smaller chunks, reducing slippage and market impact, making them a go-to strategy for both retail and institutional traders. With platforms like Uniswap, Orbs, and Chainlink also using TWAP-based pricing, it's clear that DeFi is leveling up for serious adoption, and this type of tool very much needed for institution. But that is a wrap for this week. Markets are volatile, policies are shifting, crypto's at the center of it all. Will the US embrace Bitcoin's potential? Will the global competitors take the lead? Is China gonna come in and gobble up all the Bitcoin before Michael Saylor and the Treasury come in and steal it before everyone else? Let us know your thoughts in the comments. Like, subscribe, follow, leave all the details. Love to hear from you guys. Stay sharp, keep stacking, and maybe I'll see you next week. I might be out for a little while, but been fun. See you guys.